All right, good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. We are a lender in over 20 states with over 300 loan officers. So if you see anything today that you're interested in, we'd be happy to send with one of our team members. We'd be happy to help you out. But today we'll go over all of our standard rate options for all of our standard programs, and then we'll do a deep dive into a topic as we do every day. Today's topic is going to be the different loan types we can do after our bankruptcy. Unfortunately, bankruptcies do happen, credit issues do happen. We went over some other credit events, some housing history events the other day. That was more for foreclosures and other housing history events. Today, we'll preview some options based on actual credit events for bankruptcies and some common options here. So let me go ahead and switch my screen and we'll get started for today. And as we do every day, we first want to check out the general rate environment. So typically the best indicator of rates overall is going to be the 10-year Treasury, especially as we look at all kinds of different loan programs. Here at the Mortgage Calculator, we love to offer our non-QM loans, commercial loans, all kinds of different loan types. But overall, most loans will follow this general trajectory. So you see in the last 5 days, we've had some general upward momentum here as we have a big Fed announcement coming up. And today it looks like we kind of peaked and are coming down. So that's some great news. But again, I always want to put things into perspective. So if we pull this out to 1 year, we're still pretty much at 1 year lows here. Market goes up and down throughout the day. Hopefully we get some news, some good news here from the Fed. But even if we don't, the markets are already pretty priced in and are generally, let me scroll up, lower in general than they have been over the last year or so. So definitely a great chance for everybody that are out there looking for properties here. Now let's go into our live rates here at the Mortgage Calculator. So let me go ahead and refresh this page just so we get the absolute latest rates. And we can go over our sample scenario. So as we do every day, our sample scenario is going to be a standard single family home, $500,000 purchase price, $300,000 loan amount. That corresponds to 60% loan to value. And we use an estimated 760 credit score and 40% debt to income ratio. So I just refreshed the page here. So we're going to get the absolute latest rates. Let's make sure it updates here. Just give it since it is 12 noon Eastern here. We do all of our partners, all of our banks and investors and lenders out there are updating their rates as we speak. Maybe one of them's frozen there. Let me go ahead and move on to the example today. We'll back up when we get the latest rates. So for today's example, as we do every day, we're going to pull up a specific home. So we have the home we did for the last couple shows. It is a good price there. That way we can always have a nice target that will work for all our different loan types when we compare across. And if we're looking at home and unfortunately our borrower has a credit event such as a bankruptcy, there are 2 options, but most of our standard options do have a little bit of a wait period. So first up, we'll look at our standard conventional fix, the most standard option people think of when they think of purchasing a primary home. And the most standard option here is 5% down. So that's what we use for this example. And you can see with 5% down, conventional requires 4 years of seasoning after a Chapter 7 bankruptcy and a 2 years from discharge, 4 years from dismissal for a Chapter 13. And we can offer our standard rates as low as 5.75, costing 2.5 discount points in cost. And our rate here, par rate, 6.49 in this example. So we can offer our standard conventional as long as we meet those seasoning requirements. However, many of our borrowers have a more recent event. So some look at FHA has a little more leniency as expected here. So FHA for our options using 3.5% down payment from our typical request here. We have a 2-year wait after a Chapter 7 and a 1 year into a Chapter 13 payment with on-time payments. That is the soonest we can get into an FHA option. So that's actually a good option there, but I'm going to show some QM options that may be quicker. And if our borrower is VA eligible, so definitely a great option for our VA eligible borrowers. There are some more lenient options here for our vets. And if we have a Chapter 7, there's a 2-year wait, pretty standard there. In our Chapter 13, we can go 1 year to the plan, repayment plan with trustee approval there. So definitely some unique options there, and they get more lenient. But for many of our borrowers, those still don't work. Not eligible for VA, or they may be self-employed, not be able to do a conventional loan of any type, and we need to use non-QM. So that's where we love to excel here at the Mortgage Calculator when we present our non-QM options. So the first option I found here going to be our option for a 12+ month bankruptcy. I accidentally put the wrong down payment amount there. But typically our non-QM loans, if we need to use full doc or any credit of income, we can go to 90% LTV with no PMI. But with a credit event, in this example, I used a Chapter 7 just over 12 months ago. We have to lower the LTV. So instead of 90% LTV as the max, I was able to find some options at 85% LTV or 15% down payment. Sorry, that was a typo up there. And our options here that we just pulled up today for our rate, 7.5, lowest rate for 2.5 discount points and costs. And we have a par rate here for our borrowers fresh out of bankruptcy, 8.375 rate costing 0. That's for 15% down. And we're using our standard scenario there that we always set up. Our full doc option, we can use bank statements. Now, if in even more recent bankruptcy, so if they have a Chapter 7 discharged just 1 month ago, we have this option here, and we have to lower the LTV. The lowest option I was able to find at 1%. So in this option, we were able to find 30% down payment, 70% loan to value, just 1 month out of a Chapter 7. And we even have some pretty low rate options because we were putting more down payment, 6.875 rate costing 2.5 discount points and cost, and our 7.75 rate in this option for 0 points. And we actually have a little bit of a lender credit there, $500 lender credit. And you see here, there's a 30% down option using the same exact setup. However, we were able to get pricing with our 1 month out of bankruptcy. So now let's see if we got our rates. Yes, so the page refreshed here. All programs are updated here. So let's quickly go through our standard programs, our conventional primary. We already went over that for our BK option, but our standard option 5.875, final APR 6.1. FHA, we already looked at that again, but our standard FHA comes in as low as 5.25 rate today. All of the fees included in the APR, 6.143 APR. Remember, FHA does require upfront and yearly mortgage insurance. And our VA options, again, we already looked at in general. Our VA options today, as I just refreshed it, rates as low as 5.375, final APR 5.639. Notice that's much lower than FHA, even though the rate looks a touch higher. APR. And USDA for our properties in USDA eligible areas and our borrowers that are eligible for those income types. We have rates as low as 5 today, final APR 5.953. So typically our borrowers are going to compare that to an FHA or a conventional option. And USDA is a touch cheaper in this example, so definitely a great option for borrowers. And again, we went over some non-QM options, but those were the options with bankruptcies in general. Our non-QM doc options for a we can get rates as low as 5.875, identical to conventional, which is amazing. Final APR with the fees included, 6.145, so just a touch higher on the cost here. Docs, such as we went over for credit events, but we can use alternative docs for more of our standard borrowers here and get rates much. And we can use alternative doc non-QM programs for investment properties, rates as low as 6%, final APR 6.321. And we compare that to our conventional option. Our investments today coming in again at 6% flat, final APR 6.311, so just a touch cheaper than all doc. And our favorite programs we always want to review, debt service coverage ratio. No income or employment needed for these rental property loans. We simply use the estimated rents from the property to determine the DSCR ratio, the estimated rent, the expenses of the property, the PITIA of the mortgage, taxes, insurance, association if applicable. Then we have a ratio of 1 or higher, which is what's used for these scenarios. Standard scenario, we add a 3-year prepayment penalty. Rates come in 5.999. Final APR 6.234. Beating conventional, absolutely amazing. And we can add a 5-year prepayment penalty. Rates don't go down, still the same rate, 5.999, but a little lower cost there. Final APR 6.198. Conventional. And we do have our no prepayment penalty options, second mortgages, all kinds of different options, commercial loans, etc. Please get with one of our team members if you would like a full estimate for any of our programs that we go over. But we'll go ahead and wrap the show up for today. Thanks everybody for joining us, and I hope this was for borrowers out there that may have experienced an unfortunate bankruptcy event. Just know that these standard options are great if you do qualify for that seasoning, but we do have for even 1 month out of bankruptcy, which is amazing. Thanks everybody for joining us, and we'll be back later this week with another episode of Daily Rates Live after the next Fed update. Have a great day.